This is Movers and Shakers, where we interview the upcoming generation of Make It Happen multifamily investors to share their story.
Welcome to the Movers and Shakers podcast. My name is Gino Barbaro, co-founder of Jake Gino, multifamily investor, educator, father, mentor, and I'm joined by my co-host, my brosif, Joshua Ryan Rusin. Mr. Rusin, how are we doing today, brosif?
Gino, doing well, my friend. Super excited. Got a lot of energy. Still coming off a high of last night coach's mastermind, and just really reflecting back on the growth that we've went through. And honestly, when you put good out, the people we've attracted, the caliber of them, not only with their knowledge in real estate, but who they are as humans, and just the alignment with the mission to change lives and empowering others through multifamily real estate. So loving that. Gino, what's going on with you over there?
Well, the best thing about the mastermind was that you get to learn, right? You get to host it, you get to hold it. And we started talking about negotiation, seller financing, different kinds of strategies in multifamily. And you have 8 people on this call. And it's like, wow, all the different ideas start flowing. And that's the importance, I think, of being in a community and being in an environment where you start thinking outside the box and start thinking about different ideas. And no one on that call actually said there's no deals out there, right? Did you hear one person say there's no deals out there? It's tougher to find deals. You have to be more creative to find deals. You have to underwrite more deals. But the fact that we're all out there looking for deals will actually, propel us. I mean, it was 8 o'clock. We got off that call last night. I was ready to go for another hour, Josh. I don't know about you, but I was psyched. So
Love it. I couldn't agree anymore. When you get people that are all sharing resources and best practices and what's working, and especially that high level of caliber of individuals, it's really powerful. So speaking of high caliber individuals, today we have Baron Hollowell on the podcast. A little bit about Baron. So he's a serial entrepreneur, and it can be traced back to his childhood and parents. Being raised by entrepreneurs, he knew he never wanted to work for anyone else. His first entrepreneurial pursuit was starting a successful trucking business. Taking his profits, he started investing in real estate and bought his first 2 single-family homes in 2011. Quickly realizing it wasn't scalable, he then went and when oil tanked, he adapted and started a meal prep company. Recently, Baron shifted his focus to real estate back again, buying his first duplex to house hack, and then wanting to go bigger. He joined the Jake Gino community, and last November closed on his first 16-unit apartment complex. Welcome to the show, Baron.
Thank you.
All right, so Baron, I want to start with this. Tell everybody how old you are.
I'm 28.
28 in a 16-unit deal. That's pretty incredible, guys. So let's trace back your journey. So you start a trucking company. How did you get into that? And then why did you decide you want to take the profits and buy houses rather than some of the material traps? Because that was pretty young, man, at 2011 to make that happen.
Oil was flourishing back then. A lot of people I knew were going there to make tons of money. And so I went up there and instantly knew I didn't want to work for any of the people there because I felt like I was smarter than them. And so within 5 months or so, I started my own company and just started trying to cash flow as much as I could. And I'm not very materialistic in general, like clothing and fast cars, all that stuff. And so I just started buying real estate with it because I saw potential there. And I had read Rich Dad and did all that stuff when I was a kid. But after a while, it just wasn't scalable, as well as I wasn't totally invested in it yet.
So 2 things, guys. One, obviously what you see is Baron decided that success leaves clues. He saw oil was surging. He saw through Rich Dad, Poor Dad that he could have assets that produce cash flow, and then he implemented. So you get these 2 houses, they're cash flowing, what, a couple hundred a month?
Yeah.
In my position, if I was, 2011, you're like 18, 19 years old, having $600-700 a month of cash flow, I would have been pretty excited about that. Where did you go from there, and why did you start meal prep? Let's dive into that.
So I moved after oil tanked to Boise, Idaho, because I knew there was a opportunity in meal prep business, being that bodybuilding.com's based out of here and some other larger companies. And after I tried selling those houses and I rented to some college kids that were friends of mine, cost me about $30,000 to renovate the house after what they've done, which there goes, more than 5 years of about $700 a month. So it's like, that's not scalable. I'm not going to buy a house again. That was worthless. And so I started a meal prep company, dove right in. Kept that going. I still have it today. I am trying to systematize and get out as much as possible so I can take real estate full time, and that's what I want to do. And I realized after those multifamily or single family houses, multifamily is the only way to go.
So for me, it's exciting, that meal prep space, because I used to be in the restaurant business, and meal prep really hurts what hurt my to-go business. You got Taco Bell and McDonald's delivering $5, and the
Right.
meal prep business. If I was in the restaurant right now, I would contact the meal prep company and try to position myself with them and to be able to prepare meals, and not only my meals from the kitchen, but that kind of space. So when I heard you say meal prep, I'm like, wow, that is an awesome business to be in. So I love that business.
Yeah, and I've always been health oriented, and food has been a big part of my life. So it's been kind of easy to transition to that, but obviously
Mhm.
harder to go to a new city, not knowing anybody, and create a business right up.
So
So
wow, so you're talking about a massive action. There's one thing that you said earlier on, that you weren't into the material aspects of life, which is great, because I was reading a book, Josh, by, I think his name is Nelson Nash, The Infinite Banking Concept, and he's talking about whole life, and he mentions Parkinson's law in there, which is important for everybody, especially when you're younger. Parkinson's law says when you start earning more money, you start to spend more money, instead of what Baron and what myself and what Josh are doing is, instead of earning more money, you don't defer by saying, I deserve to drive a nicer car. I deserve to get a bigger house. What everyone should be doing out there is taking the majority of those earnings that you've made in excess of what you're earning right now, put them aside and continue to buy assets or invest in your education and do whatever it takes. So that Parkinson's law is really, really important for everybody out there, at least to try to abide, because instant gratification will kill a lot of people. Just because you're making 50,000 a year, next year you make 100, you've made an extra 50 grand. Maybe take 20 of that and put it aside, or 30. Don't think you deserve anything. If you want to become financially free or you want to invest in yourself, that's not the way to do it. So I would check that book out. It's The Infinite Banking Concept. So really important that everyone thinks about that, especially when you're young. You need to invest in yourself. Take that money, invest in yourself, in your education, and surround yourself with great people. Baron, let's talk about that 16-unit deal. How did you find the deal? Because you're in a great market. It's a hot market, and everyone's up there saying, I can't find anything. How did you find the deal?
I had been searching myself constantly, and this is before I even joined Jake and Gino, and didn't know much of the route for multifamily, because
Hmm.
regular realtors, they don't know what they're talking about, and they also don't know how to find them. And that's who I was contacting, and they're trying to send me stuff, but they can't find anything,
Hmm.
obviously. And so I talked to my neighbor. She worked at a commercial real estate firm, and they contacted me, and they had a new guy there. I think he's 21, a new JV broker, but he needed to prove himself. So he picked me as something to prove himself on, and he went and cold called, I don't know how many hundreds of people, and he found a mom and pop 16 unit that was willing to sell.
Wow. So what does the mom and pop look like? 16-unit. What were the issues, the values on this property?
Um, there's a lot. So this guy had some rough issues, as in losing his job multiple times of ownership. So he's withdrawing all the money he could. So there's a lot of deferred maintenance.
Hmm.
It was significantly under-rented. I don't know if they've ever upped the rent in the 8 years that they owned it, which is absurd. They locked themselves down into some like cable plans, landscaping that was overpriced, things like that. So just all the initial cutbacks on expenses were instant value adds.
Wow. So let me just diagnose what what Baron is saying. He's found the value play, and there's so many different ways to find value in a property. The first thing he said is there's income was substantially lower. So he was a mom and pop. Mom and pop have deferred maintenance. They're burned out. They don't have any systems. They're basically Gino running the restaurant. They've got to be there, and they're just not efficient. They don't know what they're doing. They probably don't have a website. They probably don't have an application process. Hey, you're breathing in the apartment. It's called, we call it the death spiral. I'm not going to fix anything. Don't call me, and I won't raise your rent. That's probably what this landlord was all about, right, Baron?
Exactly,
And
exactly.
that's painful, because unfortunately he's lucky because he's in a rising market, so he can capitalize on it, right? That's what happened. He owned it from no fault of his own. Cap rates compressed, and the value of his property went up. Other things that Barron saw on this property, the value plays from a management perspective. For every dollar of expense that you save, you're adding to a dollar of net operating income, which is amazing. So if you have those contract pricing, where you have probably terrible garbage pricing. You probably have like landscaping, like Barron said. You're probably paying an attorney too much, a CPA too much, all those expenses. If you can cut those expenses, that's amazing. I'm probably sure that he probably cut water bill on this thing too, and utilities also, made that more efficient. If you can manage it yourself and take management in-house, that comes into your pocket also. So if you've got the double whammy of increasing rents and increasing income and then decreasing those expenses, that's going to add fuel to the fire. So what was it like when you first took over? Give me the feeling of, wow, I'm an owner of a 16-unit property now.
It was a little starstruck type of thing. Like, cool, we finally did it, got the first deal, because I had been trying for a while. I even flew out to Alabama and Tennessee and looked at stuff, couldn't get the time of day from realtors, and now I finally got something in my own backyard. It's nice. But the work that it's going to take is quite a bit, and I'm now realizing I need to get rid of that I'm a mentality, because I've been trying to do everything myself, as in the rehab on the units, the yard work, everything, just going and replacing everything. But I don't have time because I'm running my other business. I just went on a vacation, just things like that. And so I need to step back, delegate, and get things done on a more systematized method.
So Barron, let me ask you a question. Why weren't you get the time of day from the brokers in the other markets? What were you doing wrong?
I'm not 100% sure. I think just being out of state, and like, this is before I even actually joined here. This was last May. We flew out there, went to Huntsville, Alabama, Birmingham, Nashville, and we even went to the offices, but they wouldn't come show us anything. I don't know if it's just because we looked to JV walking in there, yet we did have the finances and everything in play, but they didn't know who we were. So obviously, if they don't know who I am, I just look like some young kid walking into an office.
So there's a couple things you've probably learned with the community going forward. Now that you have a deal, you have credibility. I think the other thing is just building rapport with the brokers and just calling them up and letting them know that you really know the market well. You know naturally, you know what to look for, and just calling and speaking to as many as possible, and then just sending over a credibility book would probably help also. So going forward, that's what I would give advice to the listeners. Just don't call up brokers and just show up at their door, because they're really busy right now. They don't want to go out for a cup of coffee. They want to go out and show you property tours. So probably the best thing to do would be, you know what? When are you scheduling property tours on properties? Oh, okay, you know what? I'll fly down. Let's view the property. Let's tour the property. You know, probably not going to be a great deal, but that's not the point. The point is to build rapport with them and to let them know that you're going to be able to close a deal, or you have the access to capital to close that deal, and then they'll take you more seriously. And then from there, you're going to build a rapport, and then Mary, the broker, 3 months from now has got a deal on her desk and goes, you know what? I remember Barron came down about a month ago. Let me give him a call, see if he can come down, take a look at the property. I think that's the progression that that you have. Am I correct?
Yeah, and I was originally talking to a commercial realtor off Bigger Pockets, and I had been back and forth. So he's showing me all these things, but only like 4 plexes. And I was like, I want to look at more like 70, 100 units, because the pricing down there is significantly better than it is here in Alabama. And so I told him when I was flying down, and he actually never even met with me. He sent his JV broker or something. She knew nothing. So yeah, I think credibility book would have gone a long way instead of him just talking to some random person on Bigger Pockets.
I totally agree with that.
I think there's a big lesson here for the listeners. So there's a huge difference between activity and productivity, right? So if you're not taking targeted actions, you can definitely take actions, but may not get results. You're spinning your wheels at that point. And when you spin your wheels and don't get results, you don't have momentum, and it's much easier to throw in the towel. And there is a barrier to entry to multifamily. You have to have some credibility and taken seriously, because that's how brokers get paid, is by closing a deal. So they want people that can perform and execute. So that's a huge lesson there. Are you taking the right actions in the right order in order to get results?
So Barron, let me ask you on the 16-unit deal, what have you started implementing as far as turning units? Have you been able to raise rents? Have you been able to cut your expenses on this property?
Yeah, I was originally going to take property management in-house, but with how busy I am, and this is the busy time of year for my business, I decided to keep the current property manager on, especially being winter. I didn't want to mass exodus of people moving out right away, and I don't know them, things like that. And so I had to sit down with her, the property manager, and I went over things that I wanted. I want to implement RUBS. She'd actually never even heard of what that was, which blew me away. But so we're now implementing RUBS. So people are going to start paying all their own utilities. We're going to do move-in fees instead of deposits now, which she's never thought of that either. I think that's a huge value add because usually they never get it back anyway, so why not do it? Next, we've canceled the lawn care because we're going to hire someone else for a tenth of the price. And then I've started doing a lot of the renovations myself, and we bumped the rents. Some of them are in the low 400s all the way up to what we're going to be renting them at is $695 plus RUBS now. So
Wow, that's great.
jumped it quite a bit.
So Josh, this is a point where I have to stop and I have to say to myself, is it not worth joining the Jake and Gino community by that one tip? The RUBS. If you don't know what RUBS is, you've got to join any community. If you don't know what non-refundable move-in fees, you've got to join. If it's amazing that real estate brokers and property managers don't know these strategies, and they're not difficult strategies to implement. But if you've never been around it and you've been working in your market and you can't think outside the box, that's the problem when people get stuck in a rut and they don't want to learn. They don't want to continue to grow their business and they just want to continue to do it as is. Baron, you just added probably 20% to her pocket for the next year or so. You should actually ask her for a cut, because if she starts implementing it across her other properties, all of a sudden you've made this person a ton of money. So maybe I think you should get a little kickback. What do you think about that?
I would like it.
You should ask. You should say, hey, you know what? When I'm done with my food prep business, I'll go into the property management business and we'll make some money together, huh?
Right.
Isn't that amazing? So that's another lesson I think everybody out there. Don't be intimidated by brokers. Don't be intimidated by bankers. Don't be intimidated by investors. Go in there, educate yourself, and just be open. And it's hard to find a really good commercial real estate broker out there, a multifamily broker out there, because a lot of them say they sell multifamily, but they're selling smaller units. They don't know how, they don't know what a cap rate is. They don't know what a cash on cash return is. They don't know a lot of how to manage these properties efficiently. I mean, if she was a management company and they had rents at $450 a month, that is telling me that she's not doing a good job. So that's painful for me. So what else are you looking to do for this property? What else? What are your long-term goals? You want to refinance this property? Do you want to sell it?
We'll probably hold on to it for a while. I'd like to get all of them slowly renovated because a lot of them have been renovated since 1972. Still original carpet and everything, which is not a good look.
Wow.
And it has cinder block walls instead of the drywall on the top now. So we'd like to renovate everything, get them all up to market to what my, pro forma wants to be, and then refinance it within 6 months to a year, and then cash out and just keep the ball rolling and buy another one.
So let's talk about the power of that. What did you buy it for? And then your pro forma, when everything's at market rent and expenses are reduced, what will the value be projected? And what's the time length projected to get it there?
So we bought it at $815, and we don't have any prepayment penalty. And so we're trying to refinance it within 6 months to a year. And everybody's on month-to-month leases there, which is the good part of, we're going to be able to crank these out real quick. If people don't want to pay the going rate rent, we can say next and go to the next person. And so we're going to try and refinance out at the 1.3 million mark.
Also, this is great. So let's talk about this real quick. We have RainCap, Mitchell Stogner. I'm going to introduce you to him. In-house, that looks like you're on the cusp of doing maybe an agency loan where you can get it off to non-recourse. So that is super, super exciting. And I think you could probably push it to that point with the rents that you have there and in your market. So that's awesome. But what I wanted to ask you is the due diligence period. Let's walk through that due diligence period on your first deal. What did you find in the property? What did you find that you expected? And what did you learn going through that due diligence process?
I would say these lower end, this is like a C unit property, but it's in a B area. But people don't take care of the properties as much, especially with this deferred maintenance. Like, it's going to need a new roof. They've just been repairing instead of replacing every now and again. And I'm a very numbers oriented person on, I think I learned it from one of your guys' podcasts. Like, you have 16 water heaters. How much time takes 8 years to blow one out or whatever? Divide that in. add that into your pro forma so you know exactly where you're going to be on a CapEx expense, exactly where you're going to be on a maintenance expense. And I like doing that. So my due diligence was a little more thorough than even my brokers. He sent me something not even close. But and then the property inspection came out pretty fair. Like, it's a solid property. It just needs a little love. So, but yeah, everything I think went fairly smooth on it.
And so let me ask you a couple other questions. As far as the Jake and Gino community, what did you learn from us? Because I think when you took the property over, it was really property management, right? I mean, there was a lot of, I can see the rubs going on there that you learned. I can see the non-refundable moving fees. Anything else that you took high level that said, I'm going to make money on this property? This helped me close the deal, or this helped me with the property management company?
Oh, yeah, I think that talk we had maybe a month ago that me and you had, and I downloaded all those forms and I showed them all scratched it. We put our own logo and we put them all to the new property manager. Like, this is what needs to happen. These are the turn days. We can't have, a week of sitting. We're going to have new floors in by this day, new paint in on this day, and they're going to be rented on this day. You need to be doing that. So we're trying to implement a far better system than what she was doing. Online bill pay, things like that.
So did you get pushback from her, from the property management company when you showed her this stuff? And
no, she was actually excited because she's never heard of this stuff, and she's never had a owner of any of her properties that's this into their property and this hands-on. And I told her, any cent you spend, let me know first, because I will authorize it. I'm not, the other owner kind of let her pay whatever she wanted on things that needed to get done. I'm not that way. So.
Wow. So this is the true essence of even a mom and pop property management company. You need to have certain processes. You need to have an application process. You need to have a turn process. It's a 5 or 6 day turn process, right? It's basically going in, you're doing flooring, you're doing paint, you're cleaning up, you're doing fixtures, resurfacing countertops. That's a 5 or 6 day process. If you don't have that in place, we're selling time. If you have a week or two of empty space, it's like an airplane. Once it goes into the sky, you lost that revenue. So it's really important to cut that time down and to have that processes. You can go to a move in, move out process. There's so many different processes that the property management needs to know. And that's what's important. I think you need to convey that to every property management company, especially if you're not managing it yourself. You can still share those and you can still get on your weekly calls. Do you get on weekly or bi-weekly calls with your property manager right now?
Yeah, so I called her like the day before I left on my last vacation and where are we at? And I even gave her more advice on where to advertise on, like, because one of the units wasn't renting out. I'm like, did you try Facebook Marketplace? Did you try Craigslist? She's only using Zillow. And it's like,
wow. So one other question. Are you using property management software right now? Does she have property management software?
Yep, she's on Buildium.
Oh, good. I was just going to say, Buildium is a great platform for you to use it at that small level where it's less than 100 units. And the beautiful thing about it is we use Appfolio because that was one of my biggest mistakes, everybody listening, is I waited too long to get property management software. Right now, the solutions and the technology where you can get a Buildium for your first property are so inexpensive and they're so worth it because everything is housed within Buildium. And you can actually use Buildium to advertise your properties too. They have a website where you can advertise through also. Craigslist works, but Buildium is a great platform to use. So a lot of things that you taught her, huh? That's amazing. So what are the properties does she manage? Does she manage the smaller units or does she manage any of the larger units?
They're all small, probably duplexes, single family home units.
So do you think that she might have anything for sale in the future as far as maybe 4plexes, 8plexes? Are you looking down that road to say, hey, maybe I can buy some properties that she's managing?
Yeah, we're going to reach out. And then even I own another duplex in downtown Boise. People I bought this place was on owner financing, and they liked how I went. And they're in their 80s. They have a pretty big portfolio, but they're selling out every year. So I'm going to actually approach them again. What else do you want to sell? Let's try and get all of it.
Yes, that's awesome. I love that. Let's take a quick break to hear from our sponsors.
Gino, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. I know that you've been hard at work helping Jake and Gino students do just that using our framework. Can you explain to the listeners how they can get our help?
Guys, we've been hard at work growing our community of like-minded investors, and the results of our members has been nothing short of incredible. We're looking to grow this amazing group. What we're looking for is those who want to follow our proprietary framework that we've created. Buy right, manage right, and finance right. Leverage our connections, education, and mentorship as ways to take your business to the next level.
So if you're interested in finding out more about how you can become a part of our amazing community, apply to work with us at jakeandgino.com/apply.
All right, Baron, got some short answer questions here for you. So what's your favorite book you've ever read and why?
I would have to say The E-Myth, and it's mainly just because I like the idea of building everything into a system. If you can create a franchisable method, then you can scale to any size you want.
Awesome. Absolutely love that. What about your best habit for success and why?
My best habit for success is probably just getting overly obsessive on whatever I'm into at the moment. So once I get stuck on something, I study the hell out of it and I don't stop until, I'm done with it.
Love that. Going all in. I think that most people play average and they don't go all in, and then they get mediocre and average results and wonder why. So I love that. All right. So listen, there's been a ton of golden nuggets on this podcast, and I want to dive into a few of them, and I know Gino's going to add to it. So the first one is success leaves clues. So Baron at a young age saw his family be entrepreneurs, and he saw what that was able to do, realizing that he was able to start his own businesses. From there, the value of systemizing in businesses, right? It allows you to scale, even with, any business he was in, trucking, meal prep, real estate. From there, it's time and leveraging time. It is, not only having your money work for you, but other people. And that's what allows you to really scale as well. And then the difference between action or activity versus productivity, right? Doing the right actions in the right order to get results versus just taking action and really not knowing what the results are going to be. You could spin your wheels and you're not going to produce. Gino, what do you have to add to that?
This could be another podcast in and of itself, right? It's amazing what happens when you make an investment in yourself and you learn what you're doing. And I think Baron just changed the property manager's business forever. I think he's taught her a few lessons that he learned, and all of a sudden her eyes are probably opened up and goes, wow, I can monetize this a different way. I can actually start creating a business where I systematize it. So I think that's awesome. There's so many different things. Baron's doing this part-time, everybody. He's only 28. He's got another business. So multifamily, you can start part-time. I started it part-time. I had my restaurant and I started buying assets with Jake on the side. It was a side hustle for me in the beginning. So don't think you have to go in all in on your first or second deal. You can do this part-time, especially hiring property management. And for Jake and I, and Baron says he's the I'm a mentality. I give him a lot of credit because IMAs don't hire property management companies, and he hired a property management company. So seeing his weakness where he's really stretched thin and says, I need help, he's light years ahead of me. It took me a good 4 or 5 years to figure that out. So that is amazing to figure out. Baron, I want to ask you one question. What does the future hold for you? What are your goals for this year and beyond in real estate? And do you want to transition into real estate full-time eventually?
Yeah, I'm trying to transition into full-time. Actually, I have my other businesses up for sale, just to make this the one and only thing I'm focused on. And we're trying to have 150 units after 1 year of being with Jake and Gino. I'm at 18 right now, so we got 10 months to go. And 1,000 is the goal for 5 years.
So let me ask you, why do you want to do multifamily full-time? What is the attraction? Let the listeners know what you think the benefits are and why you want to transition into this full-time.
The generational wealth aspect, also the time that it can give me back. I worked in the oil field for a long time. I lost a lot of time, but I also had those periods of vacation time. Now I'm stuck in another business. They take so much time that it's not necessarily worth that. If you were to calculate how much you make hourly owning a business, it's not what it's made up to be.
Yes, I agree that.
I feel like it's so much scalable on multifamily.
Great.
I love that. Baron, how can the listeners get a hold of you?
You can email me at baron@makocapitallllc.com. And that's MAKO capital LLC.com.
Awesome. Guys, I want to thank Baron for being an amazing guest on the show and sharing his movers and shakers story. Now, if you want to be the next movers and shakers guest, email us, josh@jakeandgino.com. And if you like the show, please leave us a review. Until next time, let's make it a movers and shakers week, everyone. See ya.
Thanks, everybody. Thanks, Darren.